IRS Form 6198 is the At-Risk Limitations Form. The at-risk rules limit the amount of losses you can deduct from an activity to the amount you have at risk in that activity. You are generally at risk for money you contributed to the activity, amounts borrowed for which you are personally liable, and the fair market value of property you pledged as security. The rules prevent taxpayers from deducting losses that exceed their economic investment in a venture. Enter your name, social security number, and the name of the activity at the top of Form 6198. An activity for at-risk purposes is generally a trade or business, the holding of real property, or a specific venture or partnership. Part 1 determines your amount at risk at the end of the tax year. You start with the prior year at-risk amount, add contributions and borrowed amounts for which you are personally liable, and subtract losses previously deducted and distributions received during the year. Part 2 calculates the deductible loss for the current year. The deductible loss is the smaller of the current year loss or the amount at risk computed in Part 1. Any disallowed loss is suspended and may be deducted in future years when your at-risk amount increases. Part 3 is completed only if you have a prior year loss that was suspended under the at-risk rules and you now have sufficient at-risk basis to deduct it. The allowed loss from Form 6198 flows to the appropriate schedule, such as Schedule C, E, or F. Attach Form 6198 to your return for each activity where the at-risk rules limit your deduction. Keep careful records of your at-risk balance year over year, because the suspended losses carry forward indefinitely until you have sufficient at-risk basis or dispose of the activity. Note that even if a loss passes the at-risk test, it may still be limited by the passive activity rules on Form 8582. Fill yours out free at FormsPal.com. This is general information, not tax advice.